Welcome to this week's Crypto Roundup. In today's recap, Circle weighs a multi-billion-dollar sale, Coinbase faces a DOJ probe after a major data breach, and $260 million vanishes in a Sui-Based exploit. Argentina shuts down its Libra investigation, Genesis sues DCG for $3.1 billion, and Solana unveils both a new phone and a protocol overhaul. Plus, Ripple's CEO gets ghosted in this week's lighter moment. Thanks for tuning in to the weekly news recap. Let's begin. Circle weighs $5 billion sale as IPO plans remain uncertain. Stablecoin issuer Circle is reportedly exploring a potential $5 billion sale to either Coinbase or Ripple, even as it continues preparations for a public listing. According to Fortune, the discussions are informal and preliminary, with no official offers on the table. The move follows Circle's S1 IPO filing in April, with JP Morgan and Citi valuing the company in the $5 billion range. While Ripple's reported bid of $4 to $5 billion was rejected last month, insiders say Coinbase remains a more likely suitor due to its close ties with Circle. The two firms co-founded the Center Consortium and share revenue from interest on USDC reserves. Coinbase's agreements also give us certain rights over Circle's assets in case of insolvency. Quote, aligning incentives is essential, Circle General Manager Emmett Hollier has said previously, highlighting the platform's structure. In a statement to the media, Circle maintained, quote, it is not for sale, affirming its commitment to the IPO. DOJ launches probe into Coinbase cyberattack. The U.S. Department of Justice has opened a criminal investigation into the recent cyberattack on Coinbase, focusing on the individuals behind the breach rather than the company itself. The probe follows a May 11 ransom demand in which an unidentified actor claimed to have stolen sensitive customer data and internal documents, seeking $20 million in exchange for silence. Coinbase refused the demand and instead offered a $20 million reward for information leading to an arrest. On Wednesday, Coinbase disclosed new details about the incident in a filing with Maine's Attorney General. The company confirmed that 69,461 customers had their personal and financial data compromised in a breach that began on December 26, 2024, and continued undetected for months. The hacker reportedly bribed overseas customer support agents to access account details including government-issued IDs, addresses, and balances. Coinbase estimates potential costs between $100 million and $400 million for remediation and reimbursements. Cedus exploit drains $260 million from Sui ecosystem. Cetus Protocol, the largest decentralized exchange and liquidity provider on the Sui blockchain, has been hit by a massive exploit resulting in the loss of approximately $260 million. According to on-chain analysts, the attacker used spoof tokens and manipulated liquidity pool price curves to withdraw real assets without proper deposits. This is the seventh largest hack in crypto history, according to Rekt. Cedus confirmed the incident on X, stating that its smart contracts were paused, quote, for safety, and that an investigation is ongoing. Preliminary findings indicate the attacker exploited broken reserve calculations and added near-zero liquidity to drain major pools, including those holding Sui and USDC. The breach has caused a widespread crash in Sui-based tokens. The DEX's token Cedus dropped over 40%, while Binance founder CZ stated that his team has offered support to the Sui network. The wallet linked to the exploit reportedly moved significant funds across blockchains, further complicating recovery efforts. Argentina shuts down Libra task force. Argentine President Javier Milei has officially dissolved the special investigative unit probing the controversial Libra memecoin scandal, just months after the token's dramatic rise and fall drew widespread scrutiny. The decision was formalized through Decree 332/2025, signed by Milei and Justice Minister Mariano Cuneo Liberona, and published in the country's official gazette. The unit, known as the Unidad de Tareas de Investigación, UTI, was formed to investigate Milei's ties to Libra, a Solana-based memecoin that soared to a $4.5 billion market cap following a February endorsement by the president on social media. The token lost over 97% of its value within hours, resulting in investor losses estimated at $250 million. The decree states that the unit had, quote, fulfilled its purpose by submitting findings to the public prosecutor's office. During the investigation, the UTI collaborated with the central bank and anti-corruption office, examining alleged insider gains exceeding $100 million. Genesis sues parent company DCG. Genesis Global has filed 2 major lawsuits against its parent company, Digital Currency Group DCG, seeking over $3.1 billion in damages. The filings, submitted in Delaware and New York courts, accuse DCG and CEO Barry Silbert of orchestrating fraudulent asset transfers and misleading creditors in the lead-up to Genesis's bankruptcy in January 2023. Central to the case is a $1.1 billion promissory note issued by DCG in 2022 to cover losses from the collapse of Three Arrows Capital, which Genesis argues lacked real liquidity. Genesis claims DCG used the firm as a corporate, quote, alter ego, executing over $1.2 billion in improper transfers, including large volumes of Bitcoin, Ether, and other crypto assets. Quote, Genesis was recklessly operated, exploited, and then bankrupted, one complaint alleges. Meanwhile, other legal challenges are unfolding across the industry. The SEC has charged Unicoin and its executives with a $110 million fraud tied to falsely marketed token rights, and Bancor is suing Uniswap for allegedly infringing on its patented automated market maker technology used in decentralized exchanges. Moreover, Strategy, its executive chair, Michael Saylor, and other senior suits are being sued by investors alleging that the company misrepresented profitability and risk metrics during its Bitcoin accumulation process, citing misleading fair value accounting practices under new FASB rules. Solana Mobile launches SKR token and sets phone release date. Solana Mobile has announced the launch of SKR, a native token designed to power and incentivize its growing decentralized mobile ecosystem, alongside the release of its second crypto-focused smartphone, the Seeker, which is set to ship on August 4. The SKR token will act as the foundation of the Solana mobile ecosystem's economic model, offering rewards and governance rights to users, developers, and hardware partners. Quote, it transforms the traditional mobile business model by giving stakeholders actual ownership in the platform, said Emmett Hollier, general manager of Solana Mobile. The rollout also introduces T-Pin, a new decentralized architecture that relies on secure hardware in modern smartphones to validate user interactions through cryptography. Quote, we're unlocking open innovation, platform ownership, and a decentralized future for mobile, said Anatoly Yakovenko, co-founder and CEO of Solana Labs. Anza unveils Alpenglow to redefine Solana's core consensus protocol. Infrastructure firm Anza, a spin-out from Solana Labs, has proposed a sweeping upgrade to Solana's consensus mechanism with the introduction of Alpenglow, a protocol its developers call the most significant change in the network's history. Alpenglow aims to replace Solana's current systems, Tower BFT and the Proof of History model, with 2 new components, Voter and Rotor. Voter manages voting and block finalization, while Rotor is designed to disseminate data more efficiently, reducing network latency and improving confirmation speeds. Anza claims Alpenglow can achieve transaction finality in as little as 150 milliseconds. Quote, this overhaul will make Solana viable for entirely new categories of applications that demand real-time performance, said Bitwise analyst Danny Nelson. According to Roger Wattenhofer, one of the researchers behind Alpenglow, the proposal could go live at the end of 2025 or early 2026, but it still needs to go through a governance process. Time for fun bits! Ripple CEO left on red by Senator Lummis. Ripple CEO Brad Garlinghouse learned the hard way this week that even crypto moguls can get ghosted. After Senator Cynthia Lummis canceled a planned meeting, Garlinghouse took to X with a public invite for a makeup chat, offering to hash out crypto strategy live on an X Space or on stage at a future event. Quote, I invite you to join me to talk about how to make the U.S. the crypto capital of the world, he posted. The senator's response? Radio silence. Crypto Twitter had thoughts. Quote, weird tweet, said Chainlink's Zach Rines. Pierre Rochard, CEO of a Bitcoin bond company, mused that Garlinghouse might have burned bridges with his past jabs at Bitcoin and support for CBDCs. For now, the only blockchain Brad's navigating is the chain of unanswered DMs. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.beehive.com. That is unchainedcrypto.beehive.com and sign up for a free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Margaret Curia, and me, Pam Majumdar. The weekly recap was written by Juan Aranovich and edited by Stephen Ehrlich. Thanks for listening.